Welcome back to another episode of Follow the Money. My name is Joshua Bellinger, and I have an interesting setup here in the tech darling that has led this rally higher, has backed off, and we're seeing hot money pile in to this specific name. So let's take a look here at Apple. Apple has been the tech darling. It's been the stock that has led the NASDAQ 100 higher. Now, we hit 137, all that euphoria, the stock split, everything else, and then September slump came, prices pulled back. So we're starting to see prices firm up here. If you look at the candlestick chart here, and then today we had a little bit of a green candle, and you have this, if you just draw a little box there, some price firming up here. And what we're seeing here in the options market that has me interested is in some short term. This is a great trade to get kicked off with the week because these are weekly options. So this is going to be a fast trade. These are fast trade opportunities. And we're going to take a look here in the October contract. But let's take a look at the option statistics first. So there's a lot of options available in Apple here. The thing to note here is that the overall volume on the call side was about 1.5 million compared to 765,000 puts. And if you notice here that on the ask, 40% of those traded on the offer. So it doesn't really give too much tail of the tape. But one of the things that we can kind of dissect, and the reason why we don't focus too many opportunities on heavy names like this is because the action is so heavy and it's so hard to decipher exactly what's going on. But we're able to pick up some activity in this name, and specifically when we look at what has happened the last several weeks, we're going to see a rally here, and Apple is going to lead the way. That's why I would say Apple is probably a great trade to kick off the week with in some kind of rally and watch prices go higher here. But the interesting activity took place in the 113.75 contracts. So these are all odd quarter contracts because of the split. So we have that 113.75, and this is where the early activity picked up. And they're buying these earlier at the 113. They're buying them around $1. So they are up 100%. A lot of them have flipped out of them. You have 51,000 contracts traded on the volume today. Not all those are going to stick tomorrow, but then what we saw was that they're actually coming in higher strikes. So we start to see that activity, that hot money pile in, and then we start to see new money pile in as well, and they start to go to higher strikes because prices are going higher as well. That's what you kind of want to see, and that's exactly what you want to see. So this Apple trade is a very short-term trade. I mean, we're talking almost intraday, if not just maybe a 1 or 2 day. But granted, we've seen Apple continue to rip higher and defy all odds until recently. So one of the things I would probably suggest to look at to take a trade to start your week off, buying the calls, is going to be a little bit tough because you got time decay. You could look at buying a spread, an in and out spread, something that we haven't covered too much here, but an in and out spread is buying something in the money and buying it and selling something out of the money. So buying a call here in the money and then selling one out of the money. You may want to give yourself a little bit more time as well. What they're looking in the positioning here is that they're looking for something to happen by next Friday, which means typically early in the week. You can also look at something possibly at selling a put spread. Not going to be as much, you're not going to make as much money as you would on the call side, but if you want to let the probabilities play in your favor, you could look to selling something on the put side. The put side as well. So those are two things, two ways to play it. That's the beautiful thing about options. You can play it aggressively, or if you're still bullish, you could play it more conservatively. Talk to you later.